from reporting its largest loss in the number of its users in 2021 to a plummeting stock, and to Facebook and Instagram potentially getting shut out of the European Union, Meta CEO Mark Zuckerberg might sooner or later face a lot of unfriending. All this while Apple, yes, the Apple with an almost $3 trillion market cap, also pushes back on Meta, formerly known as Facebook, with its new ad privacy policy. The future of Facebook isn't looking too hot, while its competition from apps like TikTok continue to suck users from Instagram and Facebook on the back end. Make sure to stick around until the end of the video to see how all this not so good news will affect Facebook in the short and long term. And for all you Meta investors, just know we got you covered with this video. Hello and welcome to Wealth Gambit. On this channel, we cover the latest stock trends and news, whether it's short sellers or a certain social media company's stock plummeting down. We cover it all here. If you like this type of content, make sure to like and subscribe. Please note that we are not financial advisors and none of this is financial advice, so always do your own due diligence. Also, don't forget to turn that notification bell on to be updated as soon as we drop a new video. Shout out to Paul Wang for watching and supporting SoFi on every level. Thanks for watching and commenting on our videos. We appreciate you. Facebook controversies over the years had been primarily circling around data and privacy breaches and fake news. One notable scandal that Zuckerberg's company was involved in surfaced in 2018 when Facebook allegedly sold 50 million Facebook users' data to Cambridge Analytica in 2016. According to news sites, this information was used to manipulate the then 2016 election. On top of that, a BuzzFeed report shows that during the 2016 US presidential election, fake news outperformed real news on social media platforms, adding a lot more reasons for people to criticize Facebook. In a move to prevent data breaching within their land, the United Kingdom and the European Union had each proposed to fine big tech companies such as Facebook of up to 10% of its earnings if these companies failed to comply with their rules in December of 2020. And in September of 2021, Frances Haugen, a former Facebook employee, had shared Facebook's internal documents with the Wall Street Journal, and former Facebook employee later testified in Congress stating that Facebook puts profits over people's safety. Rumors say that Facebook changed its name to Meta to shy away from some of the controversies linked to Facebook. On February 2nd, 2022, Meta, Facebook's parent company, reported a decline in its overall user base, a first after the company's 17-year consistent user growth. The tech giant lost about 500,000 global daily users in the fourth quarter of 2021, and some news articles attributed Facebook's user decline to young people finding the Facebook app as old and dated. Facebook is once again facing another controversy as its CEO Mark Zuckerberg may shut down Facebook and Instagram across the European Union. This came after European regulators were nearing the completion of a new legislation that would not allow Facebook from transferring, storing, and processing Europeans' data on US-based servers. With tech companies taking a massive hit in the stock market right now, Facebook is no exception to that. And Mark Zuckerberg took one of the biggest hits in market capitalization in US history. No matter what happens to you in 2022, you can always rest assured knowing that Mark Zuckerberg took a way bigger L than you. On the evening of February 4th, 2022, which is also the company's 18th anniversary, days after the company reported its Q4 2021 results, its stock fell around 26%, and the company reportedly lost around $230 billion in market capitalization, with Zuckerberg taking the biggest hit and losing $31 billion of his fortune in just a day. In its Q4 2021 results, Facebook reported an earnings per share of $3.67 and a revenue of $33.67 billion. Both of these numbers are lower than that of some analyst expectations, which devastated Meta investors. On top of that, Facebook had given a revenue guidance of around $27 billion to $29 billion in the first quarter of 2022, while analysts were expecting sales of $30.15 billion. This is what co-founder and CEO of Regulators Wealth Management, Joshua Brown's take on Facebook.
I think the thing to keep in mind is a lot of the problems with Facebook are very idiosyncratic to Facebook itself and some of their other apps. So one really good example of that is the challenges they face navigating the new iOS privacy stuff. But I think a bigger problem here, and the reason I'm not racing to buy this stock down 25%, is you really have to bet that Mark Zuckerberg can build a brand new business from scratch the way that he once did with Facebook. So he didn't build Instagram, he didn't build WhatsApp, he built Facebook. Can he build another one? Because that's what this metaverse thing really requires. Now, he has the cash flows, he has the foundation to invest a lot of money, but can he catch lightning in a bottle a second time? They're talking about losses for Reality Labs and all of the meta stuff going out 10, maybe even 15 years. So do we want to make that bet that he can do that? Because the core Facebook business right now is not in great shape. It's a huge business, but they're facing all sorts of challenges. And the growth rate that they're talking about, 3 to 11%, like that's not going to work for the investor base in this stock. So it's a tough situation. I'm not saying I would never buy it. I'm just not a buyer here. I don't know that I want to make that bet that he can do the same thing twice. Very few people, like Steve Jobs did that. Very few people have really been able to do that twice.
Some of Meta's critics say that Meta spending billions building its own metaverse is expensive, while Zuckerberg anticipates the metaverse to be the next big thing on the internet. As Meta aims to let its users live a kind of virtual life online, Meta's critics argue that this technology has yet to captivate its users. It seems like Zuckerberg is having a 2022 moment. In the early stages of 2022, as Facebook faces a lot of major issues, the younger generation turning their backs away from this tech giant gives us a hint that Facebook may be going the way of MySpace and Friendster, and the possibility of the Facebook and Instagram shutdown in Europe could put Meta in a tougher spot this year, as it is on the edge of losing millions of users, which means its revenue would definitely take a direct hit. And with that, we'll leave you with Kevin O'Leary and his reasons on why he is buying Meta's dip.
For a moment, in the context of what is occurring over the next 3 trading sessions. Number one is that this company is indexed. So the majority of the owners are institutions, pensions, very large countries. It gets a weighting previous to this downdraft, if you want to call it that, of 5 to 6% in the majority of sovereign indices. Who owns Facebook? Sovereign funds, pension plans, universities, all that. Retail investors have some of it, but it's not material. So here's what's going on right now. When you index up to 6%, you basically believe the company's not going to have a lot of volatility. You don't want vol at 5 or 6% of full weighting. Most mandates are 20% max in any sector, 5% max, 6% max in any name. This is a fully indexed name. Now, today, for all of the risks we've been talking about this name, all the concerns about the metaverse, whatever else you want to think about, it still remains one of the largest advertising platforms on earth with billions of users. So not every institution is going to sell it down to zero, but what many will do is take it down in terms of risk. So maybe they want to own 3.5%, maybe they want to own 2%. So for the next 2 or 3 trading sessions, if you want to buy down and average down, which I'm going to do, and I've done a little bit today, but I know, because I get a chance to talk to these sovereign funds all the time, and I was last night when earnings came out, they were even awake in the Middle East. They own so much of Facebook that they were awake at 4 o'clock New York time, and that's very late at night. And it was a major blow up. So you've got to wait till they flush down their positions to that 3.5%, 2%. Majority of them are not going to zero on the name. They're going to reposition it with the risk inherent. And for those that were at 2 or 3%, they're going to take advantage of this and buy into the flushing. That's what I'm doing. I'm going to bring my weighting back up to a max weighting, take advantage of a 24, 25, 26% discount. But you don't have to do it all today. There's lots of toilet flushing left on Facebook.
That wraps up today's video, guys. Do you think Meta, Facebook and Instagram's parent company, will still be top dog globally in 5 to 10 years? Let us know your thoughts in the comment section down below. As always, if you found any value in this video, smash that like button for the YouTube algorithm and share this with someone you know. Until next time, peace.